Good day traders, it's Stefanos on behalf of tixee, and in today's video we'll be giving a look back of the market for the week of the 4th until the 8th of July. But before we dive into the webinar, there were some important news, one of them being the fact that we had the official resignation of Boris Johnson as the Prime Minister of the UK. As always, please note that all of the ideas discussed in the webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. Before we get into the resignation of Boris Johnson, we're going to look at stocks first and Twitter, as we had some official reports coming in late at night earlier today. The report that came in is the fact that basically Elon Musk is pulling out of the deal from acquiring Twitter. The reason being is that Twitter wasn't able to provide any accurate estimates as to the number of spam accounts that exist within Twitter. And basically, Elon Musk and his team use this as the reason as to why they will not be moving forward with the deal. So we'll pull the chart of Twitter in front of us. I'm gonna leave it on I'm gonna switch it to the daily time frame actually, since the report came in today, and we can pretty much see already the impact that the news release had on the stock price of Twitter. We basically gapped down from the previous day, and the gap down was more or less around 7%, which is a pretty significant percentage in terms of the drop that was made in price. Now, as it stands, the sticking point, like we said, it was the fact that Elon Musk argued that they cannot verify the true or the exact figure of spam accounts, and this is something that was supposedly agreed before they would be able to move forward with any further agreements with regards to the acquisition of Twitter. Now, we don't exactly know what kind of, if this is gonna be like a breach of contract on the side of Tesla. I mean, obviously we're gonna be able to see in the coming weeks how this is going to unravel, but obviously there was a clause where pulling out of the deal prematurely would mean that, for example, the team of Elon Musk will have to pay up at least $1 billion. But some other reports, analysts argue that Twitter might be able to exercise even its right to ask for the full price. Again, this depends on the finer details and what was pretty much agreed between the two parties. But whatever the case may be, obviously we don't really care that much about the finer details. All we want to see, and we're probably going to see in the next couple of days and weeks, is that we might get some further increased volatility when it comes to Twitter, as we're going to be having reports coming in day in and day out with regards to how things are going to be moving forward between the two. So yeah, we had this significant drop on Friday, and in my opinion that's going to be like the start of some more big moves to come when it comes to Twitter. And we're going to see whether that's going to affect it negatively or positively, again depending on what sort of outcomes we get from the two parties. And yeah, then moving on to Forex and the Great British Pound specifically, which was one of the major currencies in focus after it was announced that the Prime Minister Boris Johnson will be stepping down from his position. Of course, he did also mention that the full exit would take place by October, to give time for the Conservative Party to elect his successor. Now, the way that markets reacted to the news is that the pound dollar initially rose on the announcement, and we can see this from this candlestick. This was pretty much the day of the announcement. You can see we rose from 1.19 essentially all the way up to 120s, more or less 100 pips in one single day. So obviously, yeah, this initially was seen as something positive. However, after traders started digesting the news, it became evident that the political situation in the UK is even more uncertain now as to who is going to replace Boris Johnson and what sort of impact this is going to have towards the UK's economy. We can see this is like the second day after the announcement, and initially we actually were in the red for the whole day, but those losses were made back towards the very end of the day, and we're pretty much finishing green, but ever so slightly. So again, we're gonna see what sort of movements we're gonna be getting in the next couple of weeks. But similarly to Twitter, this is obviously gonna be pretty good, I guess, for traders who are trading specifically the pound dollar, because it might give some increased ranges to work off of when it comes to like price levels or price patterns and so on and so forth. As it stands at the time of the recording of this webinar, the pound dollar is up roughly by 0.2%. But earlier during the day, it did drop all the way and as much as 1.3% as well. So yeah, quite some significant movements. And again, it doesn't really matter that much, I guess, of where it is at the end of the day. But matters also, we had this pretty strong range to work with. Obviously, this depends how it really fits in with your own strategy, whether you're more of a swing trader or like an intraday trader. So for intraday traders, this was a pretty good day, I would say, even the one previously, because again, the range is somewhat more extended. We also had a couple of these long ranges the past couple of weeks as well. So yeah, definitely some movements worth looking at when it comes to the pound dollar specifically. And lastly, we're going to be looking at oil and gold. Now, prices of oil dropped by 3.4%. Or $3.7 over the week this week, and I'll switch it to the weekly time frame so you can have a better picture. It might not seem like a pretty big drop, but in terms of percentage, it was almost 4%. After the supply showed an unexpected rise over the week by 8.2 million barrels in US oil inventories. But nevertheless, the tight supply issues are still a headline that is still circulating in the market. It's not that the supply issues are over and yeah, we're just getting oversupplies now. So yeah, especially since we also had some reports saying that 1.2 million barrels per day, which is like a pipeline that exports oil from Kazakhstan, it was ordered to be closed by a Russian court. And meanwhile, we still have Libyan supplies which are cut by political protests. So from one hand, we do get a rise in oil inventories, some of the weeks, but on the other hand, we do still have some other fundamental factors that are still affecting supplies and tightening them even further. So this is pretty much depicted quite well over the past 3 weeks, as we can see. Well, the range, it is a little bit wide. You can see that towards the end of the week, we're pretty much finishing right where we started, more or less. And if we zoom out even further, so we can see that we've been stuck in this range, with the lower end of the spectrum being $95 and the higher end being $125. And prices have been stuck in this range since the beginning of March, basically. So when we do get a breakout, now depending on which direction it's going to be, we don't really know it as of now. But of course, again, it's a pretty decent range to work with, more or less like a $25-$30 range to work with. And yeah, getting all these reports week in, week out, obviously something that adds further to the price volatility of oil. And then lastly, looking at gold, let's not forget that we had the NFP report that came out earlier today. And over the week, if we look at the dollar index specifically, so let me just pull up the chart for that. So we'll be able to see that over the week, the dollar index rose quite significantly. Percentage-wise, it was almost 2%. So given the inverse correlation it has with gold prices, as someone would expect, we can see that pretty much gold prices fell throughout the whole week, and we're pretty much closing towards the very lows of the week as well. So the NFP report was something that further boosted the dollar, since it did come out positive. So obviously it acted negatively on the prices of gold as well. And looking at the chart itself, this is pretty much the 4th consecutive week in the red. So yeah, prices have been dropping ever since reaching the 2K mark, and we're now pretty much trading towards the very lows of this structural level here. So it is a quite interesting area, because like we see here back in March, we had a really pretty strong bounce from here. We also had a strong rejection in the beginning of July as well. So we're going to see pretty much July 2021, just to point out. So we're going to see when we come back into these kind of levels, which were pretty much formed a year ago, to see what kind of reactions we're going to get there and then. And yeah, there you have it as far as the look back and review for this week. Hope you enjoyed the video and you found it useful, and I'll catch you in the next one. Till then, trade safe.